Nigeria's NGX All-Share Index increased to 13.6% year-to-date as analysts link investors' bullish sentiments to the release of first quarter 2022 corporate earnings. Tijani Ladipupo, head of Norenberger Advisory Partners, joins me to discuss this. Tijani, thank you for taking the time out to join us today.
Esther.
All right, let's get right to it. 13.6% year-to-date. We're seeing Q1 earnings driving this. I have one or two of them, but I'd like to get your thoughts, first of all, on this sustained bullish sentiment at the market.
Yes, as expected, we've seen the market coming up strong on the back of the expected earnings. We saw it closing last week, hitting up to 486 billion. And then, of course, year-to-date, hitting around 30.2%. And, of course, months-to-date at about 3.4%. Obviously, our expectations are high on the back of what most of the companies did, the year-end audited. And then, of course, bargain hunters practically just taking positions, and those that are having a hold positions are also evaluating very options aggressively in terms of profit taking. And of course, generally, these are expectations we're seeing in what would envisage is what we're seeing in the market currently.
Which of the Q1 earnings reports have impressed you so far? We have Unilever posting a 24.5% growth in revenue for the first quarter. Nigerian Breweries up 30% in Q1. Of course, we're waiting for Airtel Africa's full year 2021. But I mean, just thinking about the numbers that you're seeing so far, what are the themes that you're seeing?
So interestingly, I'll look at the World report. You can see a very fantastic revenue growth from more than 58% year on year, recording about 97 billion. Of course, without unaudited reports, we also saw the profit as high as 33%. That represents about 48% year on year. That seems quite impressive for me. Again, I'll also look at Stanbic. We saw that the interest earnings also grew, of course, from its deposits from customers, hitting some 1.2 trillion, reflecting about the 3% of its profit to hit 15 billion. That's quite impressive when you take that compared to what the full year 2021 audited has done. And then, of course, on the we can also see active movements in that share price, even with the not too impressive dividend yield. So it's expected that investors are probably also getting very active in this stocks category.
Now, I don't know if you've probably seen numbers from Nigerian Breweries. This one in particular caught my eye. Top and bottom line growth appeared to have been supported by volumes and price increases. I know the management had previously said that it was going to push for increased volume, especially for its premium brands across the lager and the malt lines, and that appears to be paying off for the company. We did also see an aggressive marketing stance, but it did have some pressure on the operating expenses, and the company went into a negative cash flow and had to supplement that with some additional debt. What do you make of all of that?
Of course, obviously, one of the things the company has taken under control is the operating expense, and that's part of the variables that has been particularly responsible for the uptick. Of course, in terms of aggressive marketing, that has also paid off, which is what the result is also evidencing. And largely, most of it, the brand has also greatly supported the launch of the new products. I think on the back of this is what has been speaking, what this impressive result has also been speaking to, and that's, of course, was also expected in that real.
Now, going forward into Q2, some analysts are saying that they expect the impact of inflation to begin to show on some of these numbers. What are your thoughts, especially for the guys in the consumer goods sector?
Oh, well, I would say that we know that most of the leading variables are not likely to have a significant effect in the next quarter. We do not expect to see it. For instance, we've seen the position of the whole thing about fuel subsidy, which is not likely to to go the way we had expected earlier. So I do not particularly see significant movements in inflation. And then, of course, I also do not see that there will be significant movement in the operating expenses of these companies to have lead to of course, make a massive shift in what the bottom line will be for the next quarter.
Now, for the banking counters, we're still expecting some more Q1 numbers. What are you expecting from the specific line items? For instance, a non-interest income. Of course, I know they make money largely from also fees and commissions, but non-interest income, what should we expect?
Yeah, I feel very strongly that the non-interest income will grow significantly. For instance, if you see what has happened with Stanbic, you've seen the non-interest income hinging high as much as doing up to 23 billion. So that's one of the lines I hope to see the banks turning out. Of course, its lending line, which is the major part, is also expected to provide significant support to our expectations.
What is your forecast for the rest of the week? Let's come back to daily market action now. Outside of earnings, where are investors hunting?
Of course, the investors are taking their time to look at, yes, it's a bargain hunting season. The investors are looking at stocks that have very high fundamentals, and that's where they're taking positions. And that's what has been the drift of the market currently, and that's what we also expect to see for the rest of the week.
What stocks do you have on your radar?
So if you look at the banking sector, for instance, the likes of Stanbic, the likes of GT, we hope to see movements. We hope to see movements in stocks like Zenith Bank, quite a lot of the others in that sector, in the banking sector. If you also in the consumer goods, we will also be looking at quite fundamentally driven stocks like Dangote Sugar, the likes of flour mills, NASCON, Nestle, and of course, if you look at the agri sector, the likes of Okomo, we also recommend a hold. We look in that direction. If you look at pharmaceuticals, for instance, Baker and Fitson will not be a bad recommendation. Especially chemicals, we look at Berger, and then of course in the energy, the likes of Cornell, Adobe, MRS, and Seplat and Total will of course not be a buy guy. And lastly, MTN, of course, we still expect an upside potential up to about 12% from.
All right, great. We'll leave it there. Thank you so much, Tijani, for talking to us today. Tijani Oladipupo, head of Nigerian Breweries Advisory Partners.